Yo. Oh. Oh. Did this already start? It's been doing that. I guess it went live. My dudes, I was like, 2 minutes, give me a sec. I guess my streaming software is now automatically going live. Good thing I wasn't picking my nose or something like that. Thank you. Shout out to Streamlabs software there. Here we are. Already into the episode. I was going to start it off with some 𝐂𝐴 jams. Let's 𝐂𝐴 jam. Wrong one. Nothing's going my way. Ooh, there we go. Pretend this is how we started. Gotta follow the data, ain't no time to air. Watch him speak now with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew. Navigating through the markets, knowing what to do. Federal reserves in control, making moves. Keeping that money flowing so the economy can groove. Chairman Powell, making paper every hour. Chairman Powell, he got that money power. Data on his side, watch him rise and devour. Yeah, he's the chairman of the board, making moves that empower. Just pretend that's how we started. Just go ahead, pretend that's how we started. Welcome back, everybody. Today is that time of the month. Comes every month after an FOMC where we get to see the inside thoughts, notes, considerations of the Fed board for their FOMC decision in April. This was a big one. There was some talk about inflation, employment, dual mandate. But the real key takeaway here and the focus of most people now is quantitative tightening and easing. And of course, the ongoing tariff. I don't even know what to call it at this point. The ongoing tariff thing. This week, we put tariffs on China, told China to take their tariffs back or we'd retaliate more. We retaliated more. China, I think, retaliated more. I think we retaliated more. And at this point, I think we should just go to infinity% tariffs to China. None of this notching up, just go all in, infinity%, and we'll just see what happens. Let's just see what happens there. It seems to be kind of the motto of 2025. Let's just see what happens. But today we may, at 2 p.m. East, we may get some insights as to the considerations why they opted to slow the balance sheet runoff. Maybe a more accurate target for the end of quantitative tightening. We'll find out. Any kind of forward guidance. Maybe we'll get some comments from the other board members, kind of where they see the economy into the year. Things we won't see today, unfortunately, and I appreciate you tuning in anyway. We'll not see an interest rate hike or an interest rate cut. We'll have to wait until, I believe, June? Is there one in May? I think June. May or June. But we are going to get some background on this. And to make this day even better, we got some beautiful green candles. Now, I am hearing that maybe infinite tariff. Novocaine, you feel me? Infinite tariffs. Why mess around? Just jump to the chase. I'm hearing that maybe there is a delay on the tariffs. I actually complained about this on Monday, I think, when there was a rumor that there was going to be a delay on the tariffs, and then the White House came out and said that wasn't actually happening. We didn't say that. Now I'm hearing it again. Can anybody confirm? Are we like delaying them? I think delaying them is wild. Don't do that. Just do them or don't do them. Don't turn them on, turn them off, turn them on, turn them off. Will they, won't they? Let the market know. Let the market know what you're going to do. That's what we ask here. Matthew Schmid, my guy, saying hype up the poll. Yes, please do. If you could, let me take 1 second before I jump into this. Please engage with the live stream. I know you have a choice in your FOMC streams, and I appreciate you coming to the creator, the original FOMC stream for your content. If you could, all I ask is hit that like button, subscribe, vote in the poll, share the stream, engage. That's it. If you engage with the live stream, the more we get that, the more YouTube shows this to new people. That's how we grow as a channel and as a community. And I love you guys. You can check out the links in the video description below. You can check out our new group, joincrowncrypto.com, but we will get into that stuff later. What is up? The OG FOMC. We legit, no matter what, people can say I'm a terrible chartist, analyst, trader, whatever. No matter what they say, no matter what, we invented 𝐴 Powell. You guys realize this, right? We made 𝐴 Powell the monster he is today. When we were covering it, nobody cared. Nobody cared. But we made him a celebrity. We made this beast. So we did make our mark on history, no matter what. And you guys were a part of that, being right here with me. I couldn't have done it without you. Nobody would have cared. Back in the day, no one covered him, man. It was just us. And then all of a sudden, one day, we saw major news outlets cover them. Every other channel cover them. They caught on to our secret. Where's the subscriber counter, Josh? I did not know that this went live. It auto started, and so I'm don't have everything fully operational. I thought I had a few more minutes there. Let me see if I can pull it up. There's the subscriber counter. Did it load up? There it is. 162,196,000 chats. Join the crew. Let's get 1 million. I was really hoping we get 1 million this year. I don't know about that. I don't know about it now. Cohen has Bitcoin dominance. Tom has 𝐴 Powell. Fair. I mean, we have been talking about Bitcoin dominance as long as Cohen, but Cohen absolutely popularized it. Let's be real. Can't deny that. We're taking hits, boys, that we are. Bitcoin finally showing some green here. This would be the first, I'll say, local higher high in a long time, since March 24th. We're going to check in on stocks and the dollar as well. Oh, my allergies, man. This weather, it's like hot, cold, windy, sunny, rainy, back and forth. I'm dying, but that's okay. I'm pushing through. Bitcoin to 60, dominance to 69% for the joke, for the memes even. I think that's not a bad strategy, not a bad guess. Bitcoin showing it first. Dang. I wasn't kidding. First higher high here locally in quite some time. And while this candle does not get us out of trouble, it's definitely a welcomed candle. Bullish engulf, showing any kind of strength, especially into further uncertainty this week. I've been telling you guys, or kind of prepping you guys here about these tariffs. And while I am no tariff expert, I can say, as maybe a chart watching expert, that tariffs can only crash the market so far. Really, there is a top end to tariffs. Tariffs are not this like infinite stairway of like continuous market destruction, right? At some point, everyone is tariffing everyone, and really the maximum damage will have been done. And then it won't really matter if we add more tariffs. Other people add to. At that point, it'll be, this is just everywhere. You know, the damage will be contained. So at some point, even if we don't see a relief from them, we may see markets bounce anyway. I would be a little worried that it would just be lower highs, though. That would be my concern. That'd be a little bit of the spookies. Let's look at the VIX, because the stock market is currently in one of the highest fear ratings I think it's ever seen in at least our lifetime, my lifetime. I think the stock market fear index is at 4. Let's see. I think it's at 4, unless someone was trolling me. All right, close enough. At 9. Now, you guys can't see that. At 9. That is an extremely low, extremely low reading. Previous close was 3. Okay, so yesterday was 3. I guess this one gets updated more often because we just saw that tick. So extreme fear here. And we also, on the crypto side, see something similar. Not quite as extreme, though. I don't know. I guess we're a little better off here. Extreme fear on Bitcoin and the crypto market. We can see we have been in extreme fear for a few days. Really, for the last months, we have seen fear in this space. And I'd say the space is holding up pretty well, actually, in spite of that. Pretty dang well. Could be doing a lot worse. VIX shot up on this week's craziness. However, still eclipsed by 2020 and even August of 2024. Interesting. There was some volatility that day. If you guys remember, that was the JPY, the Japan currency carry trade or whatever. That was a pretty spicy day. Okay, so getting to the content, in just 18 minutes, we will have these notes. We will have the behind closed doors scoop directly from Chair Powell and the Fed themselves. We're going to do as we always do. We're going to break down those notes with a little help, with a little assist from AI and from our computer friends. And we're going to see if there is anything valuable. I believe there will be, especially because the whole world, or at least the US traders, are looking at quantitative tightening and easing. The reduction to the balance sheet runoff change of the last FOMC. I think we're probably going to get some valuable guidance, some valuable insights there. What do you guys think? I think so. 18 minutes to go. Man, God, is anybody else just dying of allergies, or is it me? I'm just weak. I'm weak. I'm going to take a second here. I'm going to take one moment to talk about something that you were spoon-fed on this channel. Spoon-fed, using the same analysis we always use back in February. All the way back in February. You may have seen this tweet. You can follow me on Twitter at @TomCrownCrypto. I would take profit on the S&P 500. This was February 19th. A lot of you were here. We talked about it in stream many, many weeks in a row. Let's go back to February 19th. And mind you, because a lot of people constantly call for down. You guys know I am a perma bull. I always want to see markets move up. Never want to see them move down. I like green. I don't like red. I almost never say things like this. This is maybe the first time I have said take profit on the S&P 500. I don't know, maybe ever, to be honest. February 19th, right here, Pico top. Man, that call has aged. That's maybe one of my best, certainly when it comes to try to find markets, calls ever. We've had some good ones. Praying that's not the top, right? That would be my fault then. But since that call, and guys, you say, well, Tom, why did you say that? For what reason? It seems odd. Really, everybody was bullish. Why would you have called that? You're always bullish. We just do the same analysis. This is not a surprise for people who tune in often. We just do the same analysis all the time. From 2021 into 22, we use our fib tool, and we look for the 1618 and the two extensions. I have a great video on this on the channel about fibs, using fibs in trading. You can check it out. The two extension, also known as the measured move target. I almost always recommend, whether it's my own trading or any other chart, any other person, that if you haven't locked in any profits, buy this kind of extension. It's a great place to look to take something off the table. Unlikely that many of you did, but anyone who did, wow, you are a Chad. Well done. Congrats to you. You made the play maybe of the lifetime right now. Pretty freaking wild. From that high, man, we are all the way back to 2021's high, 21% down. A 21% call on a short for S&P 500. Unheard of. Bonkers. Appreciate anybody who called that. Anybody get that trade? Hopefully somebody did. Back to the corn. We have 15 minutes here. I'm just blasting through stuff. I'll get to the chat. I'm just trying to get all my thoughts out here. The weekly candle, honestly, this candle looks good, but we can say last week we had a candle that looked good as well. If you remember the end of March, we had a nice move to the upside, a bullish engulfing for the previous week that was basically obliterated into that Sunday closing as a really ugly hammer candle. We've traded lower this week, but it looks like we are moving back to at least test that bullish engulfing level this week at 82,379. Closing above even 80.7, I think is going to be first steps on a low here. Retake support. I think that would be good. We came just within 0.1%-ish, point percents of the March all-time high as a back test. We could still see, with uncertainty this week, we could still see something similar to 2024, where we perfectly back tested our previous high before moving on. Maybe that's in the cards here. Perfectly back testing before moving on. That'd be cool. We have gotten close, and so it's hard to tell. Hard to tell if we really need to get that extra inch or not. But it is on the table. Bull div on the week, growing. This is a more powerful bullish divergence. You guys remember back in early March, I said, this is technically bullish divergence, but this is what I call a class C, or a weak bullish divergence. Basically, it's a double bottom on RSI with a higher low in price, for those of you very chart savvy. Here we are again with a lower low versus September in RSI, a much more exaggerated one. This is a stronger bullish divergence. We'll put that in our pipe and smoke it. Really, not a lot else is too hopium filled, so we'll have to take that where we can. On the day, bullish engulf, heading back up, but yeah, really not quite where we want it. You can see here on momentum or even just any oscillator likely showing you a rolling over of the downward move of that momentum, at least temporarily pausing, VWAP approaching that zero line, and money flow begging, in my opinion, to roll over. It just hasn't quite gotten there yet. We do have some nice signs on the day, provided we get a strong close, but anything can happen, especially on these spicy Wednesdays. We have survived the death cross. Tom, why are you fudding? Why are you fudding the market, Tom? Why are you fudding it? Well, I wasn't fudding it. We have survived so far our death cross again. We've had one every single year of this bull market, and 2025 said it will not be an exception. Surprisingly, or maybe unsurprisingly, to some of the viewers here, we talked about this in depth almost every single day leading up to it. Monday, April 7th, the exact day we projected this death cross would occur. We have, at least for now, knock on wood, the low. Each time we have gotten this signal, we have had sentiment at capitulation, at bear market, just submission levels. We've had swing lows in prices, and it has marked, at least over the last 2 years, the bottom of local price action before moving higher, breaking structure. In the case of last year, moving to all-time highs, etc. Looking back really quick, we won't do in depth because you guys are probably bored of this. August of 2024, August 5th, right before the death cross happened. Sentiment was similar. A lot of the chart looks similar to this price action. We rallied right back to the 200. That is, in my opinion, that's the play. 86.9, 87 right here, back to the 200. Cut it at the 50 if you're not so confident. Same thing roughly happened back here in 2023. In September, the death cross was the Pico bottom. We never revisited that price. We only went on higher. I think something that characterized this move was a bounce of support off the 50 daily. Maybe we'll see something like that when we retake it. As it climbs down, maybe we'll see a move to 87, back test that 50 daily in the lower 80s before moving to a higher high off of a higher low and beginning an uptrend. I would like that. I would like that a lot. That would be great. We did have a little spicy move as we started up. That's a nice little candle, a 2.5% candle in 5 minutes. Nothing to scoff at. We have retaken some resistance and we're holding up, at least for now. I like the energy into these minutes. That's about all I'm going to say for it. We've got exactly 10 minutes, my friends. Exactly. What's up, Mick? What's up, Michael? Pump those likes up. That is right, fam. Please smash the like, subscribe, join our crew. Discord.gg/TomCrown. It's free. What else? Like button, vote in the poll, say hi in the chat. We got 10 minutes to kill here, and we're going to kill it chatting with you guys. Man, we're going to kill it here. So here, who is here today? What's up, Dee? We taking no hits. All right, what's up, Amen, my guy, Nikki B. I see some new names. Rumor is that there's a 90-day pause in tariffs. Can someone confirm this? Because we had this exact rumor on Monday. Ooh, CME gap filled trance. Thanks for the heads up. We'll let's take a peek at that. Well done. Well done. Good eye. You guys keep me on my toes. We do have one more gap, but that is some info worth talking about. We identified this gap on Monday, saying if you're looking for a position to close a crazy long or maybe open kind of a crazy short, in my opinion, 81.9 to 81.4. We have a new open gap from the over weekend price action, and we have filled that again today. However, there is another gap that is kind of sneakier, a little bit sneakier of a gap up here at 85.1 to 87.3. I think some of those numbers overlap with what we're talking about on the chart. The reason I say this is a sneaky gap is if you were being lazy or not really paying attention, you may look at the gap this way. Just because, okay, I see a gap in candles, but that's actually wrong. So you have to think about the narrative, or you think about the story of these candles. This day started trading at 85.6. It traded down to 84.2. It traded all the way up to 89, but it closed at 87.3. And remember, the gap is the difference of the close and open price. So it closed up here. It opened down here and sold off. So the gap is actually larger than it might seem if you didn't pay attention. So we have closed this today. Good eye, Trance, my friend. We have one gap above us, and that's it. That's all there is. So if you're looking for a continuation on this bounce, 87.3 for playing the gaps, probably the target you're looking at as low as 85.1. There's no more above us, and there is just a graveyard of gaps below. A graveyard. Which ones of these do you think will fill? I think a lot of them will never fill. Never. What's up, AV Creations? I got distracted. You guys got me off topic with your CME gaps. I was saying hello and seeing who's in the chat. What's up, Sebastian? Sebastian says, pump the likes. I appreciate that, my friend. Please hit that like button. 90-day pause. What happens after 90 days? Is there a 90-day pause? Okay, Sebastian says it's on CNBC. Adam, can I explain what happens with the sudden spike? What happened? Honestly, man, I don't think that this is like, there's going to be an interesting narrative for this candle. Maybe there's something coming in these minutes, in 5 minutes. 5 minutes? That's weird. Is my computer clock wrong? Because my computer clock says 1:53 p.m. Yet TradingView is saying this hour is over in 5 minutes and 22 seconds. So TradingView thinks it's 1:50, almost 1:55. Weird. Maybe it has to do with something in the minutes coming up. I think that's probably a BS take that just kind of panders into what we're doing here. But I don't think there's a real narrative here. If you kind of zoom out, this is just really doing similar behavior to what it has been, right? It hasn't escaped any major levels, honestly. Maybe closing above 82.3 will start, but like we're pretty much doing what we have seen off of these lows. Big bounces, selling off, higher lows, pulling into highs, and then basically losing that momentum, dropping. So this would not be crazy, and really nothing will change at this point. Oh, whew. Really nothing has changed. Wow. Allergies, man. Oh my God. Whew. Nothing has really changed, and this candle, while it is welcomed and great, and we have seen such suppressed volatility. Look at these hours. Each of these hourly candles, like 1%, 2%. We saw a 2.5% move in 5 minutes. This hour is up 4%. So in perspective, or kind of compared to the recent volatility, this is a big one, but you compare it to the greater Bitcoin volatility, and it's really not much. So I don't think that there is anything to attribute to it. Every uptrend is going to start with something like this, right? Where we start moving up and we don't give the gains back, but we have seen this many times. I'm going to need to see some more follow through, and you better believe I'm rooting for it. I'm looking for it, but I'm not quite there. Trump said 3 hours ago, now is a good time to buy. He told us 90-day pause. It's true for all non-retaliation countries. So, but didn't we put tariffs on every country in the world? So we're just saying any country that like just laid down and took it will pause. I don't know. I need to actually read this. I need to actually read into what happened, man. This stuff's so confusing. It seems engineered to be unfollowable. That is what I believe. CNBC, Trump to drop 10% universal tariff rate for all countries except China for 90 days. So what happens after 90 days? We talked about this. This is not how you get markets cooking. I'm gonna sneeze again. This is not how you get them cooking. This is not how you get them running in the way we. Oh my God, in the way we want them to. Whew. I'll take the green candle. Maybe, if you want a narrative for this green candle, take that. Say the tariff pause. But here's what happens, man. You get a 90-day pause, right? You have all this uncertainty. Everything keeps changing. Businesses don't even know how to plan for tomorrow. And now you say, okay, here's all this chaos I've thrown into your business. You've had to pivot 5 times over the last week. You barely know what direction is up. And now you have 90 days. So what happens? Okay, maybe markets recover for 90 days. But what? Do we go back to all-time highs? Probably not. Probably we get a 90-day, little bit less downward. I mean, still could, but like downward or to the right and up a little bit. 90 days passes and what? We just re-enter. And now we have a lower high and things don't look great. I don't think that is the play. I was complaining about it on Monday, so I'm going to have to stick with it. I was actually happy to hear on Monday that that wasn't the case. That it was just a rumor. And it isn't that weird, guys? So it was a rumor on Monday. Then they said, no, we didn't say that. That's fake news. And now 2 days later, they're saying it. What the actual F is going on in the world right now? What is going on in the U.S.? Like, what are we just like winging it at this point? We'll just see what happens. That's what it feels like. I'm enjoying Bitcoin continuing up into these minutes here. Let me pull up the FOMC, not FOMC. Let me pull up the minutes while you have a second here. Please smash the like button, engage, subscribe, make that little counter spin. I appreciate you. I'm going to put on the 𝐿 tune while I pull this up.
Powell, money machine going bird. Chairman Powell, he ain't playing this a blur. Gotta follow the data, ain't no time to air. Watch him speak now with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew. Navigating through the markets, knowing what to do. Federal Reserves in control, making moves. Keeping that money flowing so the economy can groove. Chairman Powell, making paper every hour. Chairman Powell, he got that money power. Data on his side, watch him rise and devour. Yeah, he's the chairman of the board, making moves that empower.
I was muted. My bad. Thank you. Okay, so what I was saying is I'm enjoying this continuation. Solid hourly close. Continued into this hour in the first minute. We'll see what happens here. Getting into exciting territory, but not quite there yet. I was saying TradingView. TradingView's candle closed before my clock on my computer said it's 2 p.m. and the notes aren't out yet. Am I tripping or is my computer clock wrong? What's going on here? TradingView, I've never noticed it being inaccurate for its time. What's happening? Anyone else noticing that? Mute Powell? I don't see the notes yet. I guess we still wait. I guess we're waiting. And correction. Correct. Well, not no correction. It's time. Anybody else see it? 201? Okay. Maybe my computer's off. I did just have to reinstall it, guys. Warning, do not update your Nvidia game drivers unless they fixed it, but I wouldn't risk it. If you don't have any issue with your drivers, don't update them. I had to wipe this computer and I guess stuff's still weird about it. Okay. Here we go. The minutes are out. The minutos are live. Let's double check. We opened up one from like 2019 months and I won't lie. It read pretty accurately to the day. So interesting. Minutes of the Open Federal Market Committee. Who wants me to just read them all word for word? I'm just kidding. Please don't vote for that. Do not vote for that. That'd be nap time story nap time with Tom Crown. What we will do is we are going to use technology to speed this up. Hopefully Grok doesn't wreck us here. Let's go. Let's start with the review of monetary policy tools, strategies, and communications. Usually this one is largely just the exact same rhetoric that is always said. Like, we are meeting our dual mandate, we're using our tools and adjusting when necessary, blah, 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 blah. But we'll see. Let's see. So let me ask AI to do everything here because there's just too much. There's too much to break down live. There's like pages and pages of like very boring text. Highlight important notes, specifically anything quantitative tightening or easing related / balance sheet runoff. There we go. Here we are. Here we are. They just came in hot. Grok is thinking it up. Trading view time is off compared to your phone. Dude, that's what's going on with me. That's what's weird. Why does it show the date? Because these are the minutes for March. I had to correct myself. These are not the minutes for April. These are minutes for March. I think I said April earlier, but I was wrong. There wasn't an FOMC this month. We have one in May. All right, Grok attack. Grok is, I won't lie, I actually like Grok out of all the AIs. I don't really use the AIs too often, but Grok does seem, I like how it looks for like sources at least, you know, instead of just giving me an answer and it's like, where did you get that answer? And it's like, I made that up, a lot of it. And it still does that. Don't get me wrong. It still does that, but it does a little bit better job because it at least looks for articles. I think that it does real-time info. Bitcoin pausing its little rally here. While that, it's still evaluating text. It's really thinking about this answer. Here we go. While it's doing that, let's look quickly. Ethereum may be getting a bounce. Maybe. At least for now, off of its measured move target, off of pretty historical support, 1,520. Pray for Ethereum. Dominance coming back down, moving with price, or moving against price as it has been, I don't know, since February. Dollar. Wow, the dollar is in chaos, man. Higher low again, but still battling 102.7 support. Stocks up. Woo. We were talking about Bitcoin's candle. Bitcoin and S&P moving in lockstep here. This looks very, very similar. What? 8% candle? What? No. That's weird. I should say 8%. That whole move is 8%. Stocks up from their low, 8%. Wow, that's actually a solid arse day, filling in the gap from Thursday. I wouldn't get super excited quite yet, though. That's like a perfect gap fill, just like Bitcoin. We're right at resistance. I would love to see that continue, but might have to be a little bit more patient. So here we go. Wow, I feel like Grok wrote like more than the thing. I think it wrote more than, son of a bitch, Grok. Way too much. I wanted you to summarize. Quantitative tightening began in June of 22. With the Fed reducing its balance sheet by not investing all proceeds from maturing securities. By March of 24, the balance sheet had decreased from 9 trillion to 7.4. As of March 18th to 19th FOMC meeting, the committee decided to continue quantitative tightening, but at a slower pace, starting April 1st. This decision was detailed in the meeting and statement released in March on this document. Let's back up for now. Kind of dual screen it. Nah, that's not going to work. Monthly redemption cap for Treasury securities was reduced from 25 to 5 billion, reflecting a significant slowdown in the pace of the balance sheet reduction. The cap for agency debt and agency-backed mortgage securities remained unchanged, and that's a big one, at 35 billion, as announced in the implementation note issued March 1925. This adjustment made to ensure sufficient liquidity in Treasury markets, particularly amid uncertainties such as potential uncertainties from debt ceiling negotiations, as reported by Bloomberg. And I guess there wasn't any, right? That was something they were interested in. The slower pace starting April 25 indicates a cautious approach to normalizing monetary policy while avoiding undue stress in financial markets. The FOMC's decision to slow quantitative tightening aligns with maintaining the federal funds rate. And here we go. Like I said, I do not think we are close to a cut at 4.25 to 4.5%, with projections indicating, and here, this is going to go against what I said, with projections indicating possible rate cuts later in the year, potentially bringing the rate down to 3.75 or 4%. So that would be what? 1 cut, 2 cut. I think we were looking at 3 or 5 cuts this year. Then it was down to 3. It's hard to keep track. This reflects the cautious approach. Of course it does. Amid elevated uncertainty with the Fed lowering its GDP growth forecast for 2025 to 1.7% and adjusting inflation projections upward to 2.7 as noted in the meeting summary. Yeah, that didn't. Grok, I'm going to have to not do the deep dive, man, because that's like way too much. It gave me more words than the original document. Unhelpful. That was the very first segment of the notes. If you're just tuning in here, the FOMC notes from March just dropped, and we are going over them live right now. First, we're going over them in this exact moment. You won't hear this anywhere else, or maybe you will, but these just came out 8 minutes ago. We're working our way through. We're on the second section. So far, nothing super crazy. Nothing super crazy. Really what we heard them say, but what we're looking for is any mention of quantitative tightening, easing, balance sheet runoff, etc. I don't believe we're close to cuts at this moment, though important to note that in the minutes, in the first section, they did say that they could see the possibility of having cuts at later in the year, right? Down maybe 1 or 2 cuts down to like 4%. That would go against my opinion. But hey, guess what, guys? I just share my opinion with you. I'm not always right. You're welcome to disagree with me. All right, summarize. This time, just summarize it. Jeez. Treasury. Okay, over the intermeeting period, Treasury yields dropped 25 basis points. Equity prices fell, notably in tech and cyclical sectors. Credit spreads widened, still below the historical averages, and the U.S. dollar depreciated. Indeed, it did. These shifts were driven by perceived risks of a U.S. economic downturn. I'll tell you what, man, the Fed does not sound bullish. None of this sounds bullish from their side. That's why they do what they do, I guess. I don't know. Fueled by weak consumer data and trade policy uncertainty rather than a change in the baseline outlook. That's important. That's big. The implied federal funds rate path from futures shifted lower for mid-2025 onward, with the model path from options and the market open desk survey remained stable, suggesting no major shift in the baseline outlook. However, survey respondents raised possibilities of lower GDP growth, again bearish, and higher inflation in 2025. Guys, I know I know a lot of you don't like when I say this about Chairman Powell and the Fed. I think we're closer to a hike than a cut. I really, really do. I don't believe that the Fed thinks we're going to see inflation continue to cool this year. I think the Fed, it's logical. You can hate it. You can wish it wasn't true. It's logical. We're talking about tariffs. Guys, tariffs do not lower the prices of things. Maybe stocks, maybe our portfolios, but they don't lower the prices of things. And while they would probably do math to separate real inflation from tariffs, because they'll say, well, tariffs are a one-off, and real inflation isn't about how expensive things are. It's about how fast they are increasing in price. So it's irrelevant if a loaf of bread is $1 or $1,000 to the inflation metric. It's how much more does that cost tomorrow? And how quickly, and then versus how much more is that in a month from now, a year from now, etc. And they might view tariffs as, okay, a one-off. That wouldn't really be included in inflation. But we have seen events like this over the last decade in the US where, guess what? Companies will just increase prices anyway. Even if they aren't getting, even when it was perceived that inflation was going up, yet those companies were not paying more for their products, they were still following that perception and increasing prices and driving inflation. The Fed, I do not think, is fooled. I think the Fed is doing its job. It's looking forward. It's using logic and saying there's nothing really here that's suggesting prices are going to go down or meaningfully stop going up over the year. That is where I'm at. You're welcome to disagree with it. That's okay. I'm not always right. Sometimes I am. Where are we? Inflation. Near-term inflation compensation rose due to trade developments, but longer-term measures fell, with inflation expectations remaining well anchored. Real yields and trade premiums declined, driving the drop in nominal treasury yields. Foreign equity indexes rose, sovereign yields increased, and the dollar weakened against most currencies, reflecting a reallocation away from the U.S. performance expectations. Dude, they're hella bearish. Unsecured overnight stay rates were stable. Repo markets fluctuated, showing signs of tightening. RRP facility usage hit a post. This is bigger. This isn't just every time we hear about this. RRP usage hit a post 2021 low of under 59 billion in mid-February of 25, nearing depletion. This suggests future portfolio runoff will reduce reserves rather than on RRP balances. I might have to ask what that means. But seeing one of the Fed's tools or something hit a post 21 low is actually interesting. We'll see. I'll ask that next. Okay. Treasury general account dropped nearly 300 billion since January of 25 due to debt issuance suspension, boosting reserves by 180 billion and slightly increasing on RRP balances. Reserves may grow until the debt limit is resolved, then drop sharply as the TJ rebuilds. Boring. Balance sheet runoffs. Okay, anything in here? Text implies ongoing QT. Runoffs reducing the Federal Reserve's balance sheet. Near depletion, RR facility means further runoff will directly lower reserves. That's big. I've never heard that. Suggested pausing or slowing runoff to mitigate risks from tightening repo conditions, nearly depleted RRP, uncertainty around reserve levels, aligns with the committee's plans, and provides insurance against reserve scarcity. Over half of the desk survey respondents expected a pause or slowdown in runoff, with most favoring a slowdown. Nice. Long-term expectations lean towards a Treasury-only SOMA profile, matching outstanding debt maturity. Key takeaways. Federal Reserve continues to reduce its balance sheet with runoff currently transitioning from reducing. I'm going to look up what that means right now. Adjustments considered. Slowing or pausing runoff was proposed. The participants were split. Consistent with March of 2025 decisions, reduced the Treasury caps from 25 to 5 billion starting April 1st. I'm curious what the RRP balance is and the Fed's reserve. I haven't read this before. Okay, so to start it, the RRP is overnight repurchase agreement, which we are familiar with, but it is a tool by the Federal Reserve that uses to manage short-term interest rates and liquidity in the financial system. Allows counterparties to lend money to the Fed overnight in exchange for Treasury securities, earning a set interest rate. What does usage mean? The total amount of money that counterparties have given the Fed post lows. After the Fed expanded its balance sheet significantly during the COVID pandemic, peaking at near 9 trillion, the RRP facility saw high usage as excess liquidity flooded the system. Usage peaked at 2 trillion in 22, and by mid-February 25, it had dropped to under 59 billion, the lowest since 2021, indicating a sharp decline in excess cash being parked at the Fed. That's kind of bullish. I feel like that's kind of bullish. Nearing depletion means that the balance is approaching zero. While 59 billion is still a significant amount of money, in the context of the Fed's massive balance sheet, it's actually not. Signaling that the pool of liquidity is almost exhausted. That's pretty spicy. Give me a sec here. I guess I'll throw the next section up. Let's take a sec. This is pretty dry. Some of this is pretty dry, although I won't lie, that was more interesting than I thought. We're going to hop over to the next section. But let's take a second here. What do you guys think so far? How you feeling? Let me pull up the chat. How you feeling so far? I think it's pretty bearish, but maybe you guys, I'm doing things. I'm monitoring things. I'm reading things. I'm trying to get ChatGPT to work. So I have my brain parked in many different spots. You guys can be more focused. You're seeing kind of information from other people at the same time too. What are you feeling on it? Bullish for crypto. You're bullish on Tom's likes for the stream, Sebastian. My guy. Data has changed since March. Bearish. BTC pump and check Ethereum. All right. All right. We did look at Ethereum earlier. How far has it moved? Wow. maybe we'll keep Ethereum up. While I was reading these notes, Ethereum is pumped about 3% here, coming off of, let's see. I'm liking this bounce. But be careful with Ethereum here. Ethereum has been doing kind of this dance all the way down. Wick low, test support, bounce, test support, bounce not as high, test support, lose support. Wick, bounce, test support, bounce not as high, test support, bounce not as high, lose support. So where are we? Well, we're hitting a major support, so that's good. But Ethereum's coming back up, I'll say to like 1,750. This was the support it was on. Now, if it's reached, will be tested as resistance. Looking at just this bounce in a bubble, it's not bad. From our lower low to our lower high, we can see this major, I'll say major, historical support also in line with our measured move target here for the downside move. Not a bad play. Definitely a solid place for Ethereum to bounce here. When you look up, though, that previous support sits roughly at the 0.5618. I think there's very good probability that Ethereum reaches 1,750. But does it break through? I do not know. Obviously, I do not know. Let's see what the ETH-BTC pair is doing, though. Is this starting to shape up? Maybe. This is at least the bare minimum requirement I would need to say maybe here. Still red for the week, Ethereum against Bitcoin. Still has not quite tested that previous major, like yearly support down there at 0.0179 or 78 or 178. Against Bitcoin, we can see this upside move on USD also followed or coupled with a move on ETH-BTC. I'll like it. I'll take it. Still not quite excited personally quite yet. I want to be. I want Ethereum to run. I want big old alt season. I want big old bull run. But I just don't quite see it yet. Coming off a lower low, moving back again, maybe kind of similar to its dollar pair, looking to retest that previous support, see if it can break through some resistance. Might not be bad. I don't trust it yet. Do you guys trust it yet? Is this good? Is Ethereum going back up? Where's the 1618 fib on the likes? Somewhere like in the 690s, 420s, something like that. I'm not sold. I'm not sold on Ethereum yet. Here is really what's kind of going on in my mind here. Dominance taking a little breather. Dominance ripping earlier this week. I got excited. I thought we were going to see 60. I thought we were going to see the high break from February. Did not, but hell, Dominance has a lot of downside potential to still be very bullish. This is such a bullish chart. Like, come up here to a lower high, maybe you come back down, test previous resistance, bounce again. Higher low, cup and handle, looking for that higher high. This is really, in my opinion, what we're seeing on Ethereum. Ethereum just kind of playing back and forth with its Bitcoin pair, maybe taking a little bit of the liquidity drawn out from Monday's rally on Dominance, kind of drinking back almost like drinking back some of its own blood, you know, like God shot, it's bleeding, and it's just like drinking its own blood, like trying to stay alive. Not quite there yet for me. I'm going to be wrong someday, though, I think. Maybe. Ethereum, someday. I'll be wrong, and Ethereum will be running again. Hourly in good condition here as the notes come out. Crypto doesn't seem too bearish on it. That's good. Check Nvidia. All right. Plus 15%. Hell yeah. So here's kind of like the thing. So I'll pull up Nvidia, but let me preface a lot of what's going on today. Look at this candle. This is a big candle for the S&P 500. It's up almost 8% today. That's a big candle. When was the last time the S&P moved 8% in a day? I couldn't tell you. Probably March of 2020. But we've seen this game in crypto. You know, the term dead cat bounce. And so hopefully we go on to new all-time highs. I don't want the stock market to go down. But the term dead cat bounce comes to mind. A lot of people don't actually know where that term comes from, the terminology. And to my knowledge, this is how I learned it, is Basically, if something falls hard enough, or no, if anything falls hard enough, once it hits the ground, it will bounce. That does not mean really necessarily good things. You know, like, I don't know, a cat falls from outer space, traveling 100 miles an hour, hundreds of miles an hour to the ground, hits the ground, and it bounces just because of the downward force. That is not usually a sign of really great things. That is where my head goes. This is what I think of when I look at this chart. You have fallen so hard, so fast, that anything will bounce, right? Almost anything will bounce if thrown hard enough. Bitcoin moving again, though. Maybe I don't want to get excited. I don't want to get excited yet, but that's kind of where I'm at here. I just got an alert for Bitcoin. Bitcoin moving higher. Let's go. Let's actually go. I don't think I've said those words in weeks. Feels like a lifetime. Bitcoin on the 4 hour up 7.5%. Let's go. That's huge. You said Nvidia is up 15-ish%. We're not quite done with the notes. We are, like, I don't know, a little bit more than halfway, I think. Nvidia, what is this? Off of like the chip stuff maybe, or the China tariffs. You tariff China. You're tariffing chips. I don't know. That's a big move though. Let's see. Nvidia up 15% on the day. Certainly one of the bigger days for Nvidia. Can we even find a day like this? No. One of the biggest days. We do have time though. The stock market is still open. It's 2:30. Got about an hour and a half of trading. This could go higher. That'd be sweet. A test of 120 will get me more on the side of the bulls for Nvidia here. Test of 120, and then maybe Thursday, Friday, we see this cool off, come down, maybe match our lows here, 105. Into Monday, pick back up. You have yourself a beautiful inverse head and shoulders reversal pattern. 120 would be a great place to test this week. That'd be awesome. Big old candle. 19% on the week. Let's go. That's crazy. It's been a really long time. Really, really long time. No, it's interesting. We're just looking at USDT dominance. Literally on Monday, people thinking it was going higher, and I said, sticking to the same plan, looking for that lower high. Check this out. Boom. Boom. Coming down again with the lower high. Looking for it to play out, man. This has been slapping. That's what I want to see. I want to see USDT drop. I want to see Bitcoin run. I want to see this bull market continue. I have not lost hope. I have not lost faith. I don't think that the all-time highs are over for this cycle. I've stuck by it. Not going to change our mind. This move actually, nice. Earlier in the episode, I was saying don't get too excited, and we're still in that setting. We're still in the don't get too excited spot. Last week, we had a bullish engulfing candle. This week, again, as of right now, we have a bullish engulfing candle on the week. That's a great way to start. We still have 4 days in the week. We got to see higher. You know, if we can come up as high as like 88K and nothing has really changed, we could end the week down again low. But that is a great start, my friends. That is a great start. Momentum, finally, this was not like this at the beginning of the episode. Daily momentum pinching. I think a lot of oscillators and a lot of indicators are going to be giving reversal signals. If we can close this daily up here on the corn, that is solid. We're gangsters. Gold, I can check gold here. Let's, we don't have too much more. I think we're on page 8 of like 10. Minutes. Let me scroll through here and see if there's any updates. The Fed remarking on GDP growth grew at 2.4% in Q4 of 2024 and continued rising into Q1 of 25, though slightly slower pace. Labor market conditions remain strong and stable. They always say that. The unemployment rate held at 4.1% from December to January. The employment to population ratio and labor force participation slightly declined in early 25. Non-farm payroll growth averaged solid gains January through February, but slowed compared to late 24. Job vacancies to unemployed ratio fell to 1-to-1, which is below its 2019 average. The quit rates rose to 2.1% in January, still below average. Wage growth moderated with the employment cost index at 3.6% and hourly average earnings at 4% over the 12 months ending December 24. PCE inflation was at 2.5% in February, and core PCE, excluding energy and food, didn't we was it Monday or last Wednesday? Last Wednesday, Chairman Powell spoke. It was like in Minnesota or whatever. Didn't he say that the Fed pays attention to PCE inflation, not PCI? Or am I getting that backwards? I remember he remarked on it, and I'd never heard that before, and caught my eye or my ear. I think it was that they look at PCE, not PCI. If you guys remember, let me know. PCE was at 2.8, both largely unchanged from the year earlier. You want to see that? Cool. Not be unchanged. Consumer and business sentiment weakened. Growth slowed Q4 due to weak manufacturing in Europe and Mexico, but showed modest recovery in early 25. China targeted 5% GDP growth for 25 with fiscal support. Inflation abroad was near central bank targets in advanced foreign economies. Total inflation rose slightly due to temporary oil spikes, but core inflation eased with slower wage growth. China showed weak price pressures, while Brazil and other countries saw rising inflation tied to currency depreciation. Let's see. Key takeaways. U.S. economy maintained solid growth and stable labor market, though inflation remained above the Fed's 2% target and sentiment soured. Globally, growth is uneven with modest recovery abroad, tempered by manufacturing weakness and trade uncertainties influencing central bank actions. Let's see if I can just jam the entire rest of this in. I want to, because ChatGPT would never let us do the whole thing. I wonder if 𝐒𝐴𝐽 will do the whole thing. Chairman Powell should start an OnlyFans. He might have to. We'll see. Are they still talking today? ATR? No one is talking except for me. Except for me. No, actually, Trump, I think it was scheduled to speak at 2 because these minutes were coming out, and he always, every single time, he speaks when anything Fed or FOMC related comes out. But no one's talking today. This is the note. So basically, we get the inside scoop of the last FOMC, and we get to kind of get behind the doors, what they were thinking, what they were looking at. Did they go live? Is the White House live? We won't cover it, I don't think. No, they're not live. Who knows? It's almost never on time anyway. So short the Trump speech, says Moon Raccoon. Probably. Yeah, if we're rallying, probably. That's just classic. Chris, he stepped away from the charts. What happened? Oh, we got a little pump-a-roon. I don't want you guys to get super excited because I don't want you to make a euphoric decision. But this is solid. What do we have here? We have a low. We have a lower high. We have a higher low. We have a higher high. That's the beginning, or that is an uptrend on a low time frame. Doesn't guarantee we're going back to all-time highs. As we said earlier in the episode, we are at some pretty interesting resistance, right? We've just filled the CME gap from this weekend. Bitcoin CME just filled. You zoom out to the weekly time frame, and we are right up against last week's open. We are battling it out for a bullish engulf. That typically we see selling into these, or at least we have seen selling into these over the last few weeks, like last week. We're right at resistance. This is kind of a crappy time to go long, in my opinion. I would almost wait personally and look maybe to take a position a little bit higher up with a little more confirmation. Potentially, if we close below this weekly open 82.4 next week, or maybe even into this week, you could look down here. You can see this was previously daily support where our week has bounced from. But now we have an open weekly candle at 78.3. That could be a place to look for a long. That could be a nice position if we come back down. Markets are like, this is exciting because nothing has been happening except for down and sideways and bad sentiment. So enjoy it. But really, guys, I think dead cat bounce in many ways comes to mind. Markets got blasted down. I was telling you guys, or I was saying to you on streams the last few weeks, that this move on the S&P 500 is really largely most similar, in my opinion, to the COVID crash, dude. To the COVID crash. Like, you fell so hard. We've had almost no price action like this. You fell so hard that you're going to see a bounce. I pray. I hope it goes higher. I hope we return to a bullish trend. But, like, be careful with this. This big move up, when you look at it in a bigger picture, is really just making up a little bit of the downside. Like in this month, still down 3-ish%, right? For the S&P just for April. April just started. Be careful. I'll tell you one thing. If markets can hold these prices into the end of April, that is a beautiful looking wick. We might be looking for some more upside, right? That's a great wick that shows buying pressure. I'm just skeptical that is really buying pressure and not maybe shorts taking profit. Like shorts taking profit, maybe longs getting stopped out, etc. Like TBD. We'll see. Let's finish up the minutes here. Let's finish up the minutes because charts are getting spicy. We're really battling that out. Over the meeting, the market implied federal funds rate path rose slightly for the near term, but fell for horizons beyond September 25. Reflecting, here it is. Like I said, a lot of you guys don't like this. It's hard pill to swallow, but reflecting uncertainty in trade policy, weaker sentiment, and softer economic data. Investors grew concerned about near-term inflation and downside growth risk. So maybe from what we've read so far, most of the participants are still looking for cuts this year or a cut this year. But that might be like one cut and then it might go back to hiking. I don't know. We'll see. We'll have to see more numbers for that. Near-term inflation compensated increased, but longer-term measures remained anchored. Nominal and real treasury yields dropped significantly. Broad equity indexes fell notably, with the VIX rising above its historical median. Funny, they commented on the VIX before this happened. That's wild. Before this spike. Oh, I can't wait for the next FOMC. It's going to be so spicy. What we got? On RRP, I think that's the biggest thing from the notes so far. Real GDP growth was downgraded from January, reflecting weaker spending and financial conditions. Inflation forecast for 2025 rose slightly. This is the problem. This is why I'm saying I don't really think they're looking to cut. Inflation forecasts for 2025 rose slightly. That's the opposite. Due to higher than expected data and trade policy effects, projecting above 2024 levels, but declining to 2% by 2027. Uncertainty increased. Downside risks grew with growth in employment, and upside risks to inflation and trade policies were persistent. I just don't think this is what they're looking for, man. Tariff expectations drove near-term. It's interesting. So they didn't really comment on policy. Powell didn't. But apparently in the notes, there are some policy comments. Tariff expectations drove near-term inflation up, though longer-term expectations held steady. Core inflation, goods rose, non-housing services inflation persisted. Federal funds rate unanimously maintained, not a single member looking for a cut back in March, reflecting solid growth, stable labor conditions, elevated inflation, increased uncertainty. Nearly all 11-1. So this is kind of cool too. Everyone against cuts in March. Now, everyone but one, I think it was Waller, 11-1 vote agreed to slow QT starting April 1st. So the Fed is narrowly or singularly minded here that QT is slowing down and is going to unwind, but not rates yet. We already said that, reducing from 25 to 5 billion, but keeping mortgage-backed securities at 35, aligns with the May 24 plans. Emphasize 2% inflation, maximum employment with policy adjustments and data-driven response to risks. Key takeaways, and then we're done. We've done the entire minutes here. That took longer than usual, almost 40 minutes. We've been distracted by some spicy charts. Key takeaways. Markets reflected tariff-driven uncertainties with lower yields, equity declines, and a weaker dollar though credit remained accessible. Growth slowed slightly. Labor held steady, and inflation risks tilted upward due to trade policies. I tweeted this, and people hated that. They hated that. It's not like an anti-Trump thing, guys. I'm not a Republican. I'm not a Democrat. I think the two-party system's retarded. I think none of those candidates care about us. I just talk about what's going on. That's it. It just doesn't matter who's in charge. If I don't like it, I say it, especially when it comes to this stuff. The Fed, numerous times here, citing policy, tariffs, etc. That's why I said people hated it. Time to just live in reality, guys. Like, if you think any of these politicians care about you, if you think Biden cared about you, you're crazy. If you think Trump cares about you, you're crazy. We need to elect people who actually care about us. We need to elect people who aren't just puppets of billionaires. Can we do that at some point in the U.S.? That'd be amazing. Thank you. Get rid of this two-party system. Get money out of politics. Other key takeaways I was about to get ranting. Growth slowed slightly. Labor held steady, and inflation risks tilted upward due to trade policies. Rates held steady. QT slowed to manage reserves prudently. Effective April, reducing treasury runoffs. There it is. We got through them. How you feeling? I know that was long. That took a while. That took a bit. We're here, though. We still here. Let me close this. I'm going to open the chat, read what you guys are looking at, feeling, vibing with. As I do that, guys, please subscribe. Make this little number roll over. Let's get that number up. Your name will pop up. We'll shout you out. Oh, now it'll pop up. I had that turned off. Like the stream, share it out. Join the Discord, discord.gg/TomCrown. Links are pinned in the chat and in the video description below. Check out joincrowncrypto.com for exclusive educational trading content. Small group stuff. This is not for everyone, but it is for people looking to invest in themselves and really trying to make the most out of not just this year, but all the years coming up in the crypto space. We want to help you do it. You can get a free week trial just by signing up. You can use the code VIP and get 50% off for life. It's good stuff. Shill complete. I think that's the whole shill. So let me refresh the chat. Who's here? Almost 600 likes. Let's go. Sebastian, I want to say at least a few hundred of those are yours, my friend. You were hyping it up. We got a lot of viewers. I didn't actually look at the viewership at all today. Let's go. Let's go. I like it. Who else here? Steve-O, essentially retro, Mark Dutch, long range crypto crispy. Sebastian, what's up, PTT? When is the love for insight of the meeting? I'm not sure. We just went over it. What's up, Dave Kane, Janix, Cat Sylv? How you doing, Sylv? Good to see you, darling. Good to see you. What up, Cody? Breaking pause in tariffs 90 days. That is... What is happening in the world? What is happening, bros? On Monday, this was fake news. And then, 2 days later? 2 days later. How can you tell me that this is like calculated or planned or anything other than just winging it? 2 days later, now it's real? Is it real? I don't know. I've lost the plot. I've completely lost the plot. None of it's real. It's all the Matrix. I agree. Keep them guessing, Craig Bowen. If you hate markets going up, keep them guessing. The FOMC minutes looking back at trade uncertainty. Now we have certainty? No, I wouldn't go that far. Tagged you in Discord, screenshots from, okay, let me, thank you, Pickle. Pickle, my mang, how are you? Good to see you here. My right hand mang. It's hard to see tags. Maybe tag me again. Huckster's back in the Discord. Welcome back, brother. Okay, well, Trump on Truth, on his social media platform. Can I put this picture here? No. For some reason, it won't let me open it in the browser. CNBC, 90-day pause on reciprocal tariffs. For some country, oh my God, dude. But this literally, Monday, was news. But it was, they said it wasn't. And now it's Wednesday, 48 hours later, maybe, and now they're doing that? Like, I'm sorry, guys. What the actual fuck? Like, what is happening? What is happening here? So did they have that plan Monday or not? I don't understand. What's up, Dave Kane, Satoshi, BTC, the Beached Whale? Hex's Life, how's that doing? How's that doing for you, Whale? What's up, Arnold? Watching from the Philippines. Shout out to the Philippines. Bullish Mike. JP Frito is present. Arson X. When FOMC? I believe the next one is May. I hate when the websites I use every day change how they are set up. Where's the Fed watch? Tools, here it is. 3 weeks and 6 days. May 7th, my friends. The next FOMC, you better tune in for that. Set your calendars. You'll want to be here. I guarantee that's going to be the biggest FOMC ever of our entire lives, of every universe, every dimension, every timeline. It's going to be huge. What's up, Nicola? Matthew Schmeedy, Tarnished BTC. Love it or hate it, Fartcoin. Ew, I hate it. What's up, Mr. Blanks, Beer Rocks, Christopher Stars. Time to stack more sats always, all day, every day. What's up, RS Miller, my friend? How is everyone? Who else did I miss? What's the date? May 7th. I say that about every FOMC, and you know what, Voxies? I'm right. Every single time, I'm right. It always is. No, but this one is. This one also is. Sometimes they're more of nothing burgers. This one is going to be big. Wait for the tweet saying his account was hacked. Oh, God. I would not put it past anybody. What's up, Jonathan Mobile? Joseph Shui. What's up, bro? Emilio. Knock Life. We bottomed? I don't know. Why would we have bottomed? I don't know. I hope so. Bitcoin. Man, we got the death cross. That signaled the bottom every year of this bull run, hopefully. Every FOMC is always the biggest and most important. That's true, though. That's facts. We're going to see the FOMC meeting at Snowy. We covered it in March. The next one's May 7th. You can check it out there. We went over the notes, which is the behind closed doors, more info, more reasoning, more kind of like why they did what they did at that meeting. We went over them. We broke them down. There actually was some pretty interesting stuff there. I was surprised. Usually they're not. What's up, Mark? I got you already. Best trader. Chicken Boyo Cluck Cluck. Crypto craze. Yep. Did everyone forget the two world's largest economies are in a trade war? Yeah. We have been so deprived of dopamine and green candles that I think people are getting a little crazy today. You kind of miss Gary Gensler in the crypto space? No. I don't know. I honestly, I didn't like Gensler's decisions, but I was never as anti-Gensler as a lot of people were. I certainly wasn't pro-Gensler, though. I like that he was going after shitcoiners, going after shitcoins. Get it. Somebody should. Missed you, Gary C. I never miss you, brother. This is the dumbest timeline. Yes, it is. NYFA absolutely is the dumbest timeline. SPX is up 30% today. What percent is it down since the year started? Probably like 80, 90%. Ooh, the poll has 2,000 votes. We should have more than that. We got a lot of viewers today. 36% of us taking hits. 36% chirpow. And 28% what? Great answers here, my friends. Great answers. Gensler was a puppet, yeah. Summer edition Gary Gensler calendar. Probably incoming. You don't believe this candle, Emma? I'm having trouble with it. But again, we were calling for the bottom to be marked by the death cross. We got the death cross. We traded down again yesterday. We closed lower yesterday, but did not break that low. We defended the death cross low. Now we're moving back up. I wouldn't be surprised though to see something like this. So bottom could be in, right? Marked by the death cross. I wouldn't be surprised to see this though. Is that doesn't really lead to near term excitement or upside, or you know what I mean? Like, marked the bottom, we rallied to the death cross. This is what happened last year. So the only thing we really know for certain is it won't happen exactly like this. But rally to the death cross, higher low, fake break high, still lower high, fall down, make a higher low, higher high, higher low. You know, just continue the chop, continue the uncertainty. Even though the bottom was in, remember, the bottom was in August of 2024, but we did not break to a new all-time high until November 6th. 90 days later, 3 months later. I could see that happening. I want to just see a giga pump, right? Wreck the shorts, wreck the bears. I don't know. A 90-day pause is not a macro bullish statement. What's up, Mr. Q? How you doing, brother? Thanks for subscribing. A 90-day pause is not macro bullish. That is, I feel like that is how dead cat bounces are born. And when you look at the S&P, so Bitcoin death cross complete, right? You look at the S&P and you say, this death cross is coming up. What does this look like it's doing? It looks like it's going right back to the cross. It may reject from there. When was the last time we got death cross on the S&P 500? 22. 21. The end of 21 into the beginning of 22. The death cross for the S&P did mark the bear market. Unlike Bitcoin. Bitcoin, we have seen the death crosses mark bottoms most of the time. I do compare this price action a lot with COVID's crash. And maybe that's what we're looking at here. The death cross largely marked the bottom there, though we don't have that cross yet. Maybe I'd be more comfortable if we did in the current day. Mark the bottom, we just trended up, right? I want to believe it. I want to believe it. I just am not quite there yet. And I love being bullish. It hurts me to not be. Oh God, the confluence. No. From February's all-time high down to the local low here, down to 2021's all-time high, tested as support. The 618 is exactly where at the 1618. This is spicy. It also gives us a lower high. It's also roughly where that death cross is. 5,639. At the pace it's doing today, that could be tomorrow. Could be by the end of the week. I'll see. If we can get S&P above here, I'll start paying attention to it being bullish. If we can retake the death cross, even more so. But right now, I'm not sold. I'm not sold on this, at least for stocks, though it's absolutely a stretch to say that the corn's going to keep going up, but stocks won't. Look at gold pop. When was the last time we saw gold and stocks and Bitcoin pop together? It's been a while. It's been a good amount of time, I think. It's been quite some time. Broke market structure, though this may be looking for a lower high also. This is kind of ugly, man. You were in a nice uptrend, higher highs, higher lows, all-time high. Then you fall down and break the previous month's low. Now you're back up, but you're really right here at a lower high. A rejection here for gold would get very ugly very fast. That's not a great candle, but we're on low time frames. I wouldn't pay too much attention to that yet. Right around the 618. Careful. If gold starts rallying, though, if gold doesn't put in a lower high here, I think that would be the most bullish for the rest of the market. If gold continues to rally in this month and breaks all-time high, likely a bearish sign for the markets. Likely that will tell us that stocks and crypto are not going to do hot. If we see this be a lower high and we continue down to our lows and break them, maybe the rally we're seeing today is it's got some legs. Maybe. The candle chilling now. I'll take it. Though. This is not bad. This is what we needed. A little bit of relief. What a crazy day, bro. It's just. As a millennial, it's like, how many times have we seen this once in a lifetime economic crisis? It's like 2009, once in a lifetime economic crisis. Guys, you made it through the worst. Everything's fine. 11 years later, we have the COVID crash. Once in a lifetime, black swan. That'll never happen again. Here we are in 2025. And it's like, bro, I heard that you like once in a lifetime economic crises. So I got you a once in a lifetime economic crisis for your once in a lifetime economic crisis. And here we are again. Like, when is it going to be our time? Holy moly. I guess it's been our time for Bitcoin, right? For millennials. A lot of millennials were early adopters. A lot of them are up a lot. I want to believe this rally. This looks good, but I've seen the same setup like in this year over and over again. This money flow rolling over, higher low here. I mean, this looks maybe better than some of the other ones. On the 4 hour, got some bull div on your RSI. 12 hour maybe rolling over too. We do have a lot of time frames like kind of in unison. Even the day giving us a reversal. Day, 12 hour, 4 hour. 1 hour is a little extended. 1 hour, if it could hold the 200 moving average for the hour, would be cool. Could see it even coming back to test that previous resistance as support. That would be cool. I don't know, man. I think all markets are really just waiting to see what chaos happens tomorrow. Where can you see news live? You were off by 5 minutes. What news? What do you mean? Why meeting delay? How long? It's not delayed. There's no meeting delay. Maybe Trump's meeting is delayed. They literally, every time they have a speech, they delay it. It's like 2 o'clock. They don't speak till like 2:45. But I don't even know if they're speaking. I heard they were speaking. I don't see it. I don't see the White House live. White House isn't live. Nope. Last stream 22 hours ago. Paul Atkins, new SEC chair. Talk about SUI? Why? This shit's like nuked. Why would I talk about it? It's nukey. Not ready. Not ready to talk about it. SUI looks okay. I don't know. What would... Okay, well, here, I'll talk about it. I guess we had a little long ski placed there, looking decent now. Looking decent from $2. I remember when we placed this. Sometime between March and now. Fire. Hopium, but I guess we were long it too. Back tested the previous all-time high. Not a bad trade. Actually, a pretty good trade. Looking heavy. I'm not ready to love again, alts. Alts, you're just going to have to wait your turn, alts, man. Like, not ready to love. I've been hurt before. I'm not ready to be hurt again. I got to see dominance. Make its move. Got to see it blow its load. Blow its top off. Then I'll be ready to love. Until then, I don't know. It just seems like buying alts is a silly concept. This doesn't make logical sense to me. Seeing these rallies cool off already. What's up, FT Music TV? I see you subscribing. What's up, Hookfish? Please look at XCN, the wildest bull flag you've ever seen. The orange man turn every moment orange. 𝐂𝐴𝐳. 𝐂𝐴𝐳. What's up, Salim? How you doing, man? Where can you see the news live? What are you talking about? Like 𝐂𝐴 Echo. What are you talking about? I don't know. The internet? TV? I don't know what do you mean? What news? Like just generic news? It's live lots of places. There's lots of places. What is there anything actually moving? Let's see. I should have had tunes on. It's been quiet. Hyperliquid is up 20% today. Ondo is up 3% for the week, but up 20% today. That's the thing. A lot of these coins, it's like they're up 10 to 20% today, but for the week, they're down 10%. So kind of almost what I was saying, like kind of the stock market. It's like, this is a really great candle. It's exciting, but you put it in the greater context and you're not moving up yet. You're really not moving up yet. Like it's better than it continuing to crash. Hedora, HBAR up 15% today, 0% for the week. SUI, we just looked at, up 14% today, down 8% for the week. Very few things. What is up for the week? Almost nothing. Virtually nothing. In the top, whatever, hundreds. Let me see, top gainers. Top gainer, ARDAR, ARD, what? This coin, I have this coin somewhere, and it rugged us so hard. Look at this is why a lot of the OGs have trauma. This is why we don't shitcoin much. Look at this thing. This thing had a market cap of like 2 billion Only 4 million volume, but 2 billion back in 2018 in January, making it like, I don't know, like the number one, like just so high up there on the ranks. Now where are we at? Market cap of 40 million. It's oh my goodness, it's up 50% today, 60% today. Yeah, good luck. Good luck on that. That's funny to see that as the top gainer, though. Anything else on there that I recognize? Gas, Neo Gas is up 25% today. 𝐂𝐡 𝐂𝐡, up 25. Based Fart Coin, oh my god. Retard Finder Coin. These names, bros. These names. What is this space? What even is this space anymore? Where are we? I need an adult. White House press conference, where? Guys, make sure you're hitting those likes and subscribes. We are live here Monday, Wednesday, and Friday at 1 p.m. East. We also go live whenever it is spicy. So you should be subscribed, turn on your notifications, enable them for YouTube on your phone. Join our Discord, discord.gg/TomCrown. Check out joincrowncrypto.com if you're looking to invest in yourself this year. Join our private, intimate, smaller group if you're looking to get good. I need an adult. That's right, Foxy. Good luck finding one. Yeah, there's none here. Pepe pumped today, sure. You got rugged again. It's been a while. Yeah, Mark, I feel like the silver lining here is really since Trump coin, people haven't been getting rugged much because I hesitate to say people learned their lesson, because I don't think they learned their lesson. But it feels like people are getting rugged less, and I like that. Mostly because everything's just been going down. Nothing has like gone up for people to FOMO buy into. That's how I see it. Yeah, Pepe coin is up. Sure. Like, this is what I'm talking about. So many things have pumped today, somewhat, but they're still down like 40, 25 more % from March. Like, not even from the year, not even from all-time high, just from March. And it's like, cool. But that is not a reason to think anything has changed yet. You can even see this is like very par for the course. You have like a 10% pump April 4th, basically a 10% pump April 1st, but each time it gets sold off. You do have a higher low. Maybe you're going to go back to the highs, right? Maybe you're going to go back to 882, paint a higher low again. Maybe you're going to look to break up, fill in some of this inefficiency, sure. But like, bros, until Papa Corn gives you the signal, be careful. Be careful catching these knives. You're going to end up with really bloody hands. A lot of these coins are never going to go back. I'm not talking about Pepe. I'm going to pull up Pepe, though. Pepe may be one of them. But a lot of these coins are never going to go back to these all-time highs. Honestly, I think I can say safely now, most of them. Especially your pump and dumpy, pumped up fun, whatever, like scam ruggies. Like, they ain't never going nowhere, man. A lot of them, even the more real projects, are not going to go back to all-time highs. That's what we've been seeing over the years. Some of them will, very few. I know, not your coin, but like, be careful. I think if you're not listening to Papa Corn, it's time you start listening. We see 700 likes. Dude, my guy, Sebastian, you are the hype man. You keep that up, man. You're going to get yourself a blue name around here. I appreciate you. Sebastian says, hit the likes. We get to 700. We just did. Viewership is trailing off. The FOMC minutes have been done. We got 700 likes. We haven't got 700 likes in a while. Well done, fam. You guys are the best. Absolute G's. We did it. We did it. I would say 1,000, but I think we're pushing it. Maybe we get 1,000 if everybody tried right now. We have enough viewers to do it. But people have been freeloading on them likes for a while. They don't give them up. Doesn't cost you anything. 1,000 like days, they are coming. FOMC smokes are? It is. We did the minutes. Harmony 1 isn't going back to 37 cents? Probably not, Tony. Probably not. Trump raised China tariff to 124%. You know what? Here's the problem. I don't think China needs us at all. How much shit do we import from China? That's the whole That's the whole reason this is happening. Dogecoin, I think Dogecoin will, Craig. That's why this is all happening. This like trade deficit thing. Trump learned what a trade deficit was and all of a sudden started yelling about it. Thought that tariffs were trade deficits, maybe. I'm not sure. We're never going to have a trade surplus with China. The only way we could do that, honestly, but no, we never will. Period. Not in like decade, 2 decades, 3 decades. But the only way we could even approach that would be to not import anything from them. But then guess what? China won't buy any of our goods or services either. And so then we're just what, zero, maybe? It's never going to happen. China does not need us. Other people will buy their crap. I promise you, other people will buy their crap. They were the first. China was one of the first people. You guys have heard me. I'm not a China supporter or something. I don't know, man. I'm American. I love America. I want to see America actually be great. I just don't think we're really heading in that direction, unfortunately, yet. But dude, I've been saying it since this year started. China is seemingly the winner of like all of this. Like every time we fumble, it seems like China is picking this up, and I don't want that to be true. I just see it. I call it out. I see it. They were one of the first people to respond to this initially, the tariff stuff, and they said, and these are the words I'm picking. I don't remember what the quote is. China is ready for a trade war or any other kind of war the U.S. may look to provoke. That's in my own words. That was the idea. They weren't saying we want to go to war. They were saying, if the U.S. goes to war with us, we're ready. China's ready. They have just immediately said that. They're not afraid. They're not going to get bullied. They're not going to back down. I honestly don't think Trump has really ever met someone that he couldn't bully or kind of gangster into doing what he wants. And I think that's China. They don't care, bro. They do not care. They do not see their relationship with us as important. Any more important than, I don't know, just this profit, right? They're not sentimental about it. China has been largely isolationist forever. They're okay with that. They're not backing down. I don't know how this ends. I jokingly tweeted, I raised tariffs to infinity%. Your move, China. Checkmate. Because, like, is that the next move, infinity%? I don't know, man. This stuff's just wild. What was fake news Monday, literally, guys, follow this plot, follow this timeline. What was fake news Monday about tariff, being delayed is now an official statement, not 48 hours later from the White House. Fake news Monday, 48 hours later, it's an official statement. Was that their plan all along? It doesn't seem like anything is the plan. It seems like the plan is we just throw a wrench into the machine and then we look to see what stops, or we look to see what happens after we do that, and we try to adjust in real time with seemingly very little insight. Like, look at the tariff list. None of those percents were the actual tariffs. They were just trade deficits. And nobody bothered to fact check that before officially going to the world and saying, F you, every other country, take this, come like submit to us and be our little beta boys, or we're going to make this worse. I don't know, man. I don't know. The Fed clearly sees it the same way too. I'm emboldened by those FOMC minutes. The Fed multiple times remarking on policy, which they made no mention of during the FOMC. But in the minutes, multiple mentions of policy and related to prices, etc. Dude, it's a wild ride. I have largely been backed off of making trades. I don't think that this is a great time to trade. Tomorrow, things could mix up. We could see giant green candles tomorrow. We could see giant red candles tomorrow. And I don't think the chart is going to be super related to that outcome. I don't think anything other than the chaos that we have been seeing for weeks now will drive it. I don't know, man. I don't know. I want to be bullish. I'm ready to be bullish again. I hope that we keep rallying. I hope that we see sustained growth. I hope that America gets its shit together a little bit. And I hope that we retake the trend we were on in 2024 when it comes to the stock market. I don't know. That's me. Anyway, I'm done. We've been live for a while. My voice is going. My allergies are bad. I appreciate you guys tuning in. The next FOMC is May 7th. be here for that. Put it on your calendars. Jump in our Discord, discord.gg/TomCrown. It is free. If you want to get VIP access in there, you can sign up with any of the affiliate links in the video description below, and you will get VIP access in our free Discord. Check out joincrowncrypto.com if you're looking to invest in yourself. Not for everybody, but looking for those who are really looking to upgrade their investing and trading this year. Jump in. You can get a free week trial just by signing up. You can get 50% off for life using code VIP. That won't be around forever. Once the markets are spicy again, that'll go away. I appreciate y'all tuning in, listening to me ramble, whether you agree with me or disagree with me. I love you. You're valid. You're important. The smartest viewership on YouTube. God, I know that's rough to say looking at the chat, but we really are. I'll catch you guys soon. Crown